Good morning, everybody. How's everyone doing today? All right. Hi, Miles. Bruce. Nice to see you, Bruce. Al. John. Good morning, guys. Thanks, John. All right. Quick recap. Here's the short on crude oil with the 8-tick momentum bar, and it came down, hit its first target, 20 cents, $200, one and done. Took about 6 minutes, and that trade's still going. There's an entry to go long here, but that would be something that would get adjusted up. So the stop is still, you should be trailing the balance line. So it's come down and it's also hit target 2, 32 cents, $320. And the stop would push down and would have stopped out a couple ticks above the balance line at 66. So that trade is finished. Targets 1 and 2, then stopping out. So not bad. Got to know the rules so that you can kind of stick with the strategy. Let me know if anyone has any questions about that. Good morning, Armando, Ron, Randy. All right, nice to see you this morning. And being the YouTuber that I have since become recently, please don't forget to hit the like button for me. So a really nice trade here on unleaded gas, and this is why we get in sync. If you don't understand what that means, let me know. This is a 9 a.m. start time. This one's set up at 8:48, but then right at 9, right in here, you got the ability to get short, and then look at what happened. So unleaded and heating oil are just two of the most explosive markets you could be in, and you guys have probably heard me talk about it recently with my upcoming Catapult Energy Boot Camp. Really excited about that. But these symbols can be traded with Spotlight for sure, as you can see. We've been using unleaded gas and Spotlight for a long time. In fact, Counterpunch would do quite well with them also. But Catapult is something unique and different and does its own thing in its own way. All right, heads up, I probably should have been paying better attention to the YM because it just kicked in. Maybe a little too fast to grab. I mean, 4 seconds, it's already past the entry. Nice winner, but not really tradable, so we'll wait for the next one. And on the pound Aussie, been kind of slow this week. Not a whole lot there. Possible long trade that canceled, and that's about it. So waiting on that one. Hey Ron, when you say you messed up on the long, are you referring to that stop and reverse? You referring to this right here? Good morning, Crypticon. Yeah, so did you put your stop at that entry at 81? So at least it's a good lesson to learn because you didn't lose, you didn't lose. All you did was leave a little money on the table. Here's the concept that you want to remember. When a stop and reverse comes up, we want to get a little extra price action confirmation on the reversing trade. So the whole premise is that we want to protect the trade that we're currently in. And by moving the entry for the reversing trade up a couple ticks, plus or minus key level adjustments also, if it's a short, you would minus, right? Like this, we could stay in the original trade sometimes, but if the price does push up through the additional price movement to get to that reversing entry, that's where your stop would be then. And that's often enough to keep you in the original trade, as you can see right here. Nothing will ever be perfect, but we've been using this method for years. It works pretty well. You want to try to stay in your original trade unless you have additional evidence that the market's flipping over. And what we mean by additional evidence is extra price action confirmation pushing further up to hit an adjusted entry. So that's the idea behind that. Good lesson to learn. That YM turning into a nice trade. Unfortunately, it just went too fast. And soybeans continues to just be rock solid. Right here at 8:30, long trade, pops up, hits target one, 10 ticks, that's 2.5 points, and then stops out. But that's typically one and done. So soybeans with counterpunch, and all that took place within 30 seconds. So you had time to place the trade for sure. You had to be nimble, but it happened. And then when it finally stopped out, you're like a minute, 18 seconds in. And that's one of the reasons we love soybeans as an extra market to trade, because talk about finishing quickly. That often happens. So if you have any questions about that, let me know. And then on crude oil, remember you got your 8:50 start time or 9. I kind of like the 9, but 8:50 tends to work. In this case, I don't know if that was, yeah, maybe you got long here, and if so, you stopped out, obviously, on that tiny little trade. I typically, I hate trades like this, and I'm going to pass on them every time, because the minimum target is 10 ticks. Target 3 is your minimum target in this case, and you've got your stop, you got your key level adjustments happening, and I just don't like them, so I'm not going to take little trades like that. Would have avoided it, but you can see it didn't do well. Then comes the 9 a.m. trade, and that's the one that comes down and almost gets to target 2. Trying to get to 60, gets to 62, misses by 2 ticks, and then stops out. But then the next trade, also pretty small, but quite a bit larger, 12 ticks, 16 ticks. That one wins. And so Counterpunch gets it done a little bit differently this morning than Spotlight, but does get it done. Off to the races on the YM. If only there was a way to grab that trade. There would be a way. You want to know how you could get a trade like this? It's a little bit beyond the beaten path of the trade plan. But what you could do is this. And you could toggle these things on or off. But There's a few tricks here. One, I kind of like the trade that gives us the trade off the yellow line and the blue line. I like it off of the 200 moving average also. And it's actually set to true. That would be your D05. If you don't have that, you could always do it manually, and I'll show you how. But basically, it's diamond level stuff, but it's taking the yellow trade and applying it to the 200 moving average. And then you turn on add-on trades like this. The add-ons are up here, so use add-ons. Because you can see the exhaustion dots lining up on the 200 moving average. Those are strong setups. And it's a setup within the setup. But since you missed, or we missed, that first one because it went too fast, and it's breaking out to new highs with some strong upside, finding support. Remember, resistance becomes support, breaks through the 200, comes down and tests it. Sellers get tired here, get the setup, and then you could always use your handy dandy fib line retracement tool. If you don't have diamond level spotlight, you can always just draw the trade like that. And that's how you could do a trade like that, if you could spot it. Obviously, it's advanced. Ron, yeah, it's not the SMA, it's the second EMA. So, because it's on the 200 EMA. The SMA we use on the 20, the dots don't get quite close enough to give you a trade off the blue line, but you definitely got that really nice one off the 200. Same concept, different line. Granted, that's more advanced usage of the strategy, but you have to remember the strategy exists beyond the dots on the chart. If you understand the strategy, its strengths and weaknesses, you start getting better at it, and then you learn how to spot opportunities that may not show up with just the traditional dots, the way the system is wired. Because the system is wired as a basic usage that works really well, but that doesn't mean there aren't advanced applications of the strategy that you can do. Oh, well, yeah, 12 range. Okay. I used to be on the 12. I just found it to be too fast and the 14 to be much steadier. But especially now with volatility is bit as large, volatility is a lot bigger than it was. So, but if you like the 12, stay on the 12. Do what works for you. Quick look at Russell. You got the squeeze zone here that's preventing a short, which would have been a nice short. And if you remember, the squeeze zone is when the 50 is coming up from below the 200, pushing up, squeezing the space between the two lines. So if you have it splitting between the entry and a target, it's another way we used to say that, it's the mustard line. The trade doesn't cut the mustard. Because really, even though this is a test zone and a lot of times trades will fail at that 200 moving average, which this did, and then went straight down, I find that the higher odds typically are going with the 50 on up, especially if it crosses over and keeps going. But anyway, that's why that trade was missed. It's just a filter. V-shaped reversals are pretty tricky anyway. The failure to get higher led to the strong move down. Breaking through resistance without the follow-through led to the strong move down. Right at the open, too, so it's pretty tough here to, minute in. But then the next trade comes, and that one works fine, doesn't quite get to target 2, so you have to take another trade. Happens to be the blue one here, and that one also gets to money management, locking in some profit, and still going. So even though that first trade would have been nice to grab, the next two trades worked out just fine, or are working out fine anyway. Not done yet. But look at the 200 moving average putting up the resistance again. So you got resistance from above, support from below. Who's going to win? Looks like the buyers want to win. If it can break through that 200 and rally up. But you got some V-shaped reversals going down and going up. And there's a good chance this trade's going to hit its target. We'll see if it has enough. That 200 moving average definitely has magnetism. And we'll see if the buyers can muster the strength and pull away and rally on up. So keep an eye on that if anyone's in it. I noticed on Forex Factory, the crude oil report elevated from a yellow label to an orange label. That's interesting. I remember the days when it was a red label. It'd be pretty cool if that were to happen. Get Forex Factory to label it red. I don't see too many red labeled reports anymore on their calendar. All right, so the Russell came up and did hit that perfect target too. Spotlight kind of hitting on all cylinders. Again, a lot of people joining us, so welcome you guys. Crazy Ivan, good to see you. Please, you guys, hit the like button. Sometimes I feel like the town crier sitting on the street corner with a tin cup. Hit the like button. Throw 2 bits in the bucket, please. Gregory, good morning. Maybe already mentioned, but the online California work with the CO report on Wednesday, so is that a counter? Okay, great question. My hunch is it will work, but I haven't looked at it or paid attention to it. Hey, Roger, glad you can hear things. Gregory, the reason why I haven't is because I'm trying not to duplicate stuff. It's like we have something that works so well already and has been working for years on crude oil inventory. Both Spotlight and Counterpunch have been marvelous for years and years. And there's only so much I can do as a solo operator. So it becomes less of a priority for me to try to also then have a third option for the same report when we got something that works so well already. So I haven't really looked at it. But it's a really good question. And, during the boot camp, I'm going to be teaching my techniques on how I create trade plans in the first place. So it's certainly something that anyone can apply that to the crude oil report and see for themselves how it might work. But for me, it's just a lower priority because there's so many other things on my list that I need to do. And I just don't see it being as something super important when we have 2 options already that work so great, if that makes sense. Al, yeah, that's okay. So this is definitely a counterpunch thing here. Yeah. And keep in mind, this is the November contract now. Yeah, YM has been really active. It got short here. I wasn't paying attention. Probably should have been. That one also a very fast trade. 47 seconds in, it sets up. 5 seconds later, it's already past the entry. So probably another setup that's too fast to grab. It's one of the things with momentum bars that could certainly happen. And if the trade's too fast, it's too fast. It's just the way it is. You wait for another setup then. Yeah, Al, TradeStation has different symbols than a lot of other vendors. ZS, definitely soybeans on Ninja. And I'm just looking at Catapult ES since I had it open from the other day, and right at the open, what a great trade. I don't know if anyone's following that. I usually think it's better to wait later in the session, but it's been really good on the open at times, and if you're really careful with it, maybe develop some sort of way to handle those trades a little bit differently than the traditional approach. But this is what it looks like right here, right at the open. And look at that, perfect target 3 or 4, 6.5 points on the ES right there. Not bad, huh? 5-minute bars are so weird. Good job, Ron. Man, you're like Iron Man. Catapult definitely has its charms if you learn how it works. It's not that hard. This is what Bitcoin's doing today. It's still vacillating around the 200 moving average. It's come up. Remember, support becomes resistance. Wasn't even able to get to the 200 and now selling off, at least today. I'm looking for another leg lower. If it gets down into this area here, I'll be buying some. Doesn't mean it won't go lower still. If it gets to here, it could still go down more. But there's a lot of people that are looking to buy Bitcoin at lower prices. So it's not just going to be a straight line down. I think it's going to be a fight every step of the way. Every time it goes down, people come in and buy. People are trading it. They're trading in and out. People are also buying to accumulate at lower prices. So it's interesting. This is only the futures contract, but I use it as a proxy just to kind of get an overall sense of where this might go. We did see the strong leg down. Counterpunch called this all the way. We got the reaction up into the 200 moving average. You have to kind of use your mind and think abstractly. Maybe think of this, look at a weekly chart to really see how clean this is. In fact, let's do that. Yeah, Gregory, exactly what I'm thinking too. It's just there's so many things one can do, and I've been doing this for close to 18 years, and I have a pretty broad catalog of stuff. Right, I've done so much, and so I have to kind of pick my battles since I'm only one person, and I always run out of day before I run out of things to do. So check out how these lines line up here. Now you really see the action, reaction, subsequent action, but on a weekly chart. And then the histogram from a fast trend 5 times higher. So this would be like on a chart that's almost like a monthly chart, 5 weeks. That's already in a downtrend, as you can see on the histogram. And the 200 moving average on the weekly chart is down in here, and the price is living below the 50 on the weekly chart, right? Support becomes resistance again. It did stab up, but this little wick right here is down today. That's what we saw, the red bar on the daily chart. We'll see where it closes this week. But my sense is it's going to try to meander down and meet this 200. That's my sense, and maybe go beyond that. Of course, anything could happen. News could hit. Elon Musk can get an itch in the other side of his butt cheek and decide to buy it. Who knows? You know what I mean? It's like anything could happen. But just looking at the technicals, you got kind of a head and shoulders pattern here. You got some divergence. Well, you don't really have the divergence you saw on the daily chart, because you got this making new highs and this making new highs. So you don't really see the divergence that we saw on the daily chart, but you just see it looking very overbought and then the tide turning. But the head and shoulders on the weekly chart's a pretty powerful pattern, right? So basically you got a left shoulder, a head, a right shoulder, and a neckline. I'm going to call this the neckline. That's pretty close, I think. Breaking. We never really even got a retest of the neckline. That's pretty weak, right? You don't even have enough strength off the 50 to come up and test that neckline. So is that a head and shoulders reversal on the weekly chart? It's starting to really look like it. I wish we had some volume figures. Well, maybe we do. I mean, there's not a lot of volume anyway, so it may not mean much. But on a futures chart, we might have some volume. Notice the increased volume on the bar that breaks below the neckline. That's the thing I'm looking for. And notice the move up to the head on lower volume. You got the move up to the left shoulder, higher volume. The move up to the head, slightly lower volume, but the sell-off is where the higher volume spikes, right? These are all classic head and shoulders technicals. I should know about head and shoulders, right? One of my earliest trades, most successful trades, unwittingly, was a head and shoulders where I shorted the pound against the dollar. Our friend George Soros made billions, I made a wife. You've all heard that story. This is a classic pattern. It's very powerful. Keep these charts handy for future reference. Yeah, so it looks to me like this is the trade that would be active in the trade plan, short at 292. Finally enough time to execute on it. And that one's trying to get to at least money management at 218. Hasn't gotten there yet. It's got to break through that 50 moving average, which is definitely showing support here. But notice also that the legs going up are waning. Maybe a last gasp attempt to get high, breaking resistance, and then failing to follow through could set up a strong move in the opposite direction. And we're in a test zone. If it can break the 50, there's a good chance it'll come down and test the 200 and get close to a target 3. These are the kind of things you want to look for. Aside from all of that, it is the first trade that's executionable on this trade plan, unless you're going to do this, creative trade I told you about here, which is not part of the official trade plan. So, and this trade, it may still come up and make a new high. It may not be done rallying. But usually a breakout of resistance to new highs that fails to follow through will lead to a strong move, or can lead to a strong move in the opposite direction. To me, the odds are the short is good. And I think, did it give you a chance to get in? No, it just missed hitting the entry again. I was going to say you can get in sync with it if it comes up. And it almost came up. We'll keep an eye on this one. This is the official first trade of the morning for this trade plan, because the other two were too fast to grab. And when you're testing and learning this, and you're doing the prove it to yourself exercises to build your foundation and trade plan, which I hope you're all doing, you have to keep an eye on the clock. If you see an entry and then you see the bar go right on through and you have no other chance to grab the entry, you got to look at the clock and assess if you would have had time to take that trade. Because if you wouldn't have time to take it, don't count it. You don't want to have a trade in your trade records when you're building a trade plan that's not tradable. That's not going to help you. Trying to get measurable results and prove your trade plan is going to make you money, you can't count a trade that you would not be able to execute. So far, that 50 moving average has been very strong support here. We have not been able to get through it. There is a chance maybe to get short again at 249 if you miss that trade. In fact, it looks to me, let's see if it's it may be trying to test these highs and then come back down again. The stop is above the high of the day. Do you think it's going to come up and make a new high of the day? It could. It didn't hit money management, so you have the ability to get in sync with it if it comes back down. What you may want to do, one way to handle this, is to see if it comes up and tests and fails and then comes back down. And maybe that's what this is. Hard to say. So far, it made a lower high. Let's see if we come down and get through this 50 moving average now, or if support holds and it comes up and goes higher. This is the kind of trade I like, as you guys know by now. The market is definitely overbought. Anyone has any questions, let me know. Got the crude oil report coming up in about 29 minutes. So in about 15 minutes or so, I'll close this session and then reopen a new one a few minutes after for our crude oil report, like I usually do. Don't forget, next week is a holiday week. We will be closed on Monday. And then the crude oil report will be Thursday instead of Wednesday. Thursday at 11 a.m. I don't know if I'll be able to do that on that day. It might be John with you that day. See how my schedule is shaping up. Crazy. Well, remember, this is an OSOB indicator, oversold, overbought. So the pink bar is stabbing up over the yellow line. The zero line is an overbought signal, which gives you the pink trade to go short. And also the green line does also. The green line is a little different. The green line is the strength of trend. Whether the trend's going up or down, it's going to push the line up. And when the green line gets up above the zero line, that also means the market is overbought or oversold, depending on which trend pushed that line up. In this case, it was an uptrend, making it overbought. Did I say oversold? Yeah, overbought. So that's what gave the green trade. But then it stabbed up again. When this came up again, it pushed the bars up again, causing it to become overbought again. There's a way to adjust the sensitivity on this, which will eliminate some trades and maybe improve the quality of your reversal trades. You'll definitely miss some winners. You'll avoid some losers. This is something that I've taught in the past. We haven't really looked at it or talked about it in a long time. But one way to adjust the sensitivity on this, where you eliminate like maybe these little pokes. Like here it became oversold, right? By barely getting above the zero line, you could effectively move the zero line higher. But look at what that trade produced. So you have to be careful, right? You could miss something like that. That's why I think I've got it at the perfect setting. But an argument can be made sometimes to increase the sensitivity of the oversold overbought indicator and focus more on a higher quality trade that takes a little bit more to become overbought or oversold. This is getting a bit advanced. Again, you have to remember the strategy exists beyond the indicators. There's the strategy, and then there are the indicators, which are nothing more than tools to help us implement the strategy. The dots on the chart, the lines, the graphs, the this, the that. All that is additional. The strategy exists without any of that. So the better you are at understanding the strategy, the better you're going to be to use your tools. Like a master carpenter, you're going to build a better house if you're a better carpenter with the same tools as someone else who's not as skilled as you, right? So that's the metaphor. JP, UTA question. In the fixed fractional money management section, next to average dollars loss, what does the column contracts refer to? I believe it's your position size going on and off based on the growth or setbacks, drawdowns of the curve as you grow your account based on your risk parameter, number of contracts go on or off. I think that's what it is. Without looking at it, I'm trying to figure it out in my mind. I'm not okay. There's a long trade. I'm not seeing it on this chart. You would adjust your entry up a couple ticks, plus or minus key level adjustments or key support and resistance levels. And then you might have to flip over to long. Shorts make me nervous when support holds and holds and holds and holds and holds. Will it break through and capitulate lower, or will that support hold and push this to new highs? So definitely in a no man's land right now with this short trade. Anything could happen. So far, it's been making lower highs, but we need to see it break through the 50 moving average. Well, the stop on your short goes where your long reversal is. So you end up with a double order, an order to buy yourself out of the short and another order to buy yourself into the long. Yeah, you move it. You got to stack them. I usually put them one tick off. So I'll put the stop on the short where the entry should be to go long, and then I'll put the entry one tick above that because it's easier to manage. But you can put them at the same place too, as long as you've learned how to cancel orders. Yeah, with support holding like this, there's a good chance that this short is going to fail. Yeah, sure thing, Bruce. So I suspect, Ron, you got long. I'm not sure what reversing trade you're looking at. It may not be done testing. We could still put in a lower high and head lower. These are the highs of the day, so definitely a fight going on in here. But so far, I like the chances for the long trade better than the short trade. That support on the 50 moving average has been really strong. Let's see if it'll come back down and test it again. Doesn't look like it wants to. Yeah, I could tell. So in a few minutes, I'm going to be ending this stream and then restarting again for the crude oil report. All right, so that is a stop and reverse right into the high of the day. Very difficult. So 83, get the high of the day at 90. So 83 is the long, and hope you make a new high of the day. That's all you can do on that one. Can't fight City Hall. And you can see it breaking out. So here's a case where the breakout to new break-in resistance didn't lead to a strong move lower. It led to finding support and a good chance this market's going to go up today. So you got 314 as target one, your first objective. Money management at 310. Target two is at 332. Money management is at, as I said, 310. Let's see if we can get there. Got to get through a pretty big number at 34,300. There's your money management. You see it finding resistance right at the 300, but breaking through. Let's see if we get up to our money management level. And it did. Oh, missed by one tick. There it is. So stops need to move to break even, and I'd actually put mine one tick below at 82 instead of at 84. Trying to get to 14, got as high as 11, so missing target one by 3 ticks so far. Every new high is a new high of the day. Let's see if this rally continues. So we saw the Dow in the 60s, up in the 60s. Now it's up over 130 points. Let's see what there's any strength left. We need follow through. We keep making new highs. Let's see if we can get the follow through now. So I was in the short. Now I'm in the long. I like these YM trades. I like my odds on the short. Didn't work out. And I like my odds on the long. And support holds. It's a good chance that is gathering strength for a push higher, which it did. Now we just need follow through. A pullback here is normal, but hopefully it's not going to be too big of a pullback to hit our stops. That blue line hasn't caught up yet. The blue line is usually where the pullbacks occur, but it's been a little bit behind this move. This move happened faster than the blue line can react to it, so maybe it's going to pull back to that blue line, and we're hoping it won't, obviously. Yeah, sure thing, Ron. Hey, Kenneth, do you always use tick charts on everything? Well, this is actually a momentum bar. So this isn't a tick chart. It uses one tick increments. I know it says one tick up here, but this is a range bar. A momentum bar is a type of range bar. Every bar is 14 ticks. A tick chart is different. A tick chart counts orders. So a 377 tick would be 377 trades. Then the bar closes, the next bar opens. But this particular bar is every 14 points. If the price moves 1 point beyond, it starts a new bar. Yeah, so it's good to learn your chart types because they're different than a time-based chart, right? A time-based chart, a lot could happen in 5 minutes or very little. It really has nothing to do with price action. It's all about time. It's a different kind of dynamic. A Renko bar is a type of range bar, but these are quite a bit different. Renko bars are just unique to themselves, but they are range bars. A range bar is how much range in the bar before the next bar prints. So in this case, it's a 14, but it's not Renko. So there is some similarity, but it's also quite different. I like them because they're more dynamic to what's actually happening in the market with price action itself. And my strategies are all built on price action. It's not that they don't work on time-based charts. They do, and they often work really well. But I just find the momentum bar to be the chart that works. I mean, these are trade plans that have been working for years. So at some point, you walk in a dark room, you flip on the lights, the light comes on, and you don't think about what made the light come on. All you know is that you flip on the light switch and the light comes on, right? I'm not thinking about, oh, how many electrons went through the wire from here to there? You know what I mean? I'm like, I don't care. It works, and that's what matters. And these are plans that have been working for a very long time, so now it's just a matter of just executing. Range bars take practice because you don't know how long it's going to take. There's no time element. Sometimes they go fast, sometimes they go slow. But one thing you can do is you can anticipate where the entry and the stop will be because you know it's a 14 range. So for example, in this particular bar, you got a high of 03 and a low of 90. That's a 13 range. So one more tick above or below, and that 14 tick or 14 points will be satisfied, And that bar will be ready to close and the new one to open if it goes one tick beyond. That's the difference of a momentum bar and a range bar. The momentum bar requires the one tick more to close the bar and open the new bar. That's why when you look at these, you see them all offset by one tick up and down. You don't see any of them with the exact same open and close. Yeah, if it works, it works. What's important, and these are really good questions, Kenneth, thank you for asking. Hopefully you learned something new here. It's important to understand the pros and cons and the strengths and weaknesses of a chart. So most people don't think about time-based charts because they're so used to trading them. It's just so much could happen in a 5-minute chart. You could have a big move up and miss the entire trade because there's nowhere to get in. Meanwhile, the momentum bar has got all this action up and down inside of that 5 minutes. Just for example, I mean, a good way to look at it is to look at the 5 minute. Well, it's the ES. I was going to say if it was the YM, show the difference here. But here's the thing, guys. I'm out of time. The crude oil report's starting in 11 minutes. I need to close this stream and reopen the new one. So just jump back in a few minutes. All right, if you're in the YM trade, keep an eye on it. Hope you enjoyed this session. Don't forget to give me a thumbs up. And I'll see you for the crude oil report in a few minutes, all right? All right, I'll see you shortly.